Why do investors keep shrugging off a slowing recovery? Let's ask my next guests. Mark Smith is the Senior Vice President for Investments at Wells Fargo Advisors, and Brian McCauley is Co-Portfolio Manager at the Hennessy Funds. Welcome to both of you. Mark, I'll start with you. Why no greater concern for all the slowing growth that we're now starting to see?
Hey, thanks for having me back on, Kelly. The economy and the market kind of remind me of this book I read in high school, The Tale of Two Cities. It was the best of times, it was the worst of times. And you've seen the best of times, the stock market's at all-time highs, the real estate prices around the country at all-time highs, cash on hands in Americans' pocket at all-time highs. And you've got, my clients who are small and mid-sized business owners, they just got out of a pandemic and we're coming on the way out. They're leaner and meaner than ever. And so all good things on that end, but we're seeing reopening. Some of my clients who are in corporate America are saying they don't have to be back to work till 2022, 2023. The Fed is really dovish. They're not talking anything about raising rates anytime soon.
Right.
And then you just saw this week that the U.S. is on a list of countries that Europeans shouldn't travel to. So lots of different things that we're looking at right now. But value is where I'm seeing opportunity, specifically in the financial sector. You're seeing that from 08, 09, they really haven't come back like a lot of other sectors have. And their diversified revenue streams is phenomenal. They got credit cards, mortgages, wealth management, asset management, investment banking.
Right.
So if you were talking about this like a tech company, it's so funny that the financials are competing against a tech company, which I think they're in a competition for their life. And all these companies are doing really well on the financial side. So financials for sure. And then materials is another sector to look at. Every single one of my clients who's buying a home or renovating a home, all their materials are up 20, 30, sometimes 40%, and the waits are 9 to 12 months to get things. So I think the material sector really has a good story as well to continue the performance. They're up 17% year to date.
Brian, let me turn to you. You like CarMax, RH, Allegiant Travel. So a couple of themes there that kind of fit into the world that Mark was describing. But what would you say to those? I'll sort of repeat the opening question. Why do markets keep doing well, even as the data point towards a loss of momentum?
Well, we still have a very accommodative Fed. Stimulus programs are robust, and still consumers have a lot of money in their pockets to spend. There are difficulties hiring employees, so employees are getting raises, and I think there's a general ebullience about this reopening experience that we're having. And so when we look back and take stock of where we're at, we're up fivefold with dividends reinvested in the S&P 500 over the last 12 years since the bottom in 09. And, we're seeing a lot of relatively speculative activity in the market with meme stocks back approaching their highs, with SPACs, being so popular, with aggressive growth companies, being very richly valued. And so our approach in this market is really to look for areas that are not so hot, but still have a lot of value to them. And we're finding that in some reopening plays in transportation, CarMax, Allegiant Travel, RH are good examples of that.
Yeah. Do you think that the market overall, Brian, is going to underperform in the years ahead?
I think we're looking at a mid to high single-digit total return in equities over the next decade. And so it's probably below historical averages, but relative to fixed income, I think it's a pretty good place to be still, especially with interest rates as low as they are.
Yeah, and let's pick up on those low interest rates. Mark, circle back to you and talk about the financials for a moment. Rightly or wrongly, they do trade together. So, if you think interest rates are going up, financials are an obvious play. But what if they don't? Tell me how you think or what you would do with that trade if I told you the 10-year was still going to be below 1.5% next spring.
That's a great question. And there's a good indication that it could be based on how dovish the Fed is. But I do think that these financial firms have found a way to make money when all the winds are blowing against them. And so the fact that they've really diversified the ways they make money, and they're really competing well against a tech industry that is coming for their neck, I'd still stay long the financials no matter where interest rates are for the short term, because if you're a long-term investor, all you're seeing is value there. And so I would continue to, have that no matter where rates are in the next 12 months.
All right, Mark Smith and Brian McCauley, thank you guys both.